annual subscription based on the amount of activity, on the amount of transactions that our clients are using. This is sort of the primary business model that we have. So it's what you would consider ARR, right? Annual recurring revenue. And this is basically trending on, usually the way that companies in this space are valued is on a forward multiplier of that. And people were looking basically a year, 2 years ahead in terms of where we're going to be from a revenue standpoint. I think the most exciting thing for us is actually the growth. In 2021, our client base grew 800%. Our revenue grew 600%. We are targeting another 300% growth this year. So overall, the metrics and the and the multipliers look reasonable within what you see in the market.
Do you think that to that point you were saying that it looks reasonable in the market? Do you think that overall we're starting to see kind of lofty valuations? That's a complaint I've been hearing from quite a few VCs.
Look, I mean, we definitely far from being the player that raised in the highest multiplier in this space, but I do think that there is a lot of appetite from. Let me take a step back. When you look at the type of VCs that actually invested in our recent round, right, you would see their names that this is actually their first investment, right, into crypto. So I think that there are a lot of mainstream VCs that sort of through 2019 and 2020, because of the crash back in 2018 and their sort of unwillingness to participate in this ecosystem because of the ICO crash, right? They didn't go into this market, and now they are catching up because they see the growth, they see that it's real, they see that everyone are building here to really revolutionize the financial system, and now they don't want to miss out, right? So it's true that there is a slight FOMO in terms of getting into the right companies, and therefore there is some. I would say willingness to give up a bit on the valuation, but I would say that it's very, what we've seen this round, which was actually, we were not raising. It was a round that people basically approached us to raise, and therefore you see a lot of VC money sort of coming into the space and seeking for the best companies because they don't want to miss out.
Mm-hmm. So what are you going to do with the money? And you mentioned a couple of regions. Which ones are the most excited about building out and enthusiastic about building out crypto infrastructure?
Yeah, so I think the regional expansion is definitely an important avenue for us for growth. And most importantly is actually our allocation of resources into two areas. One, given the fact that we grew 800% from a customer standpoint back in 2021, we are still catching up in terms of all of our customer support, customer success infrastructure, solution architecture. So all the internal resources that we need to have to better support our clients and make them successful, right? Because we are in the base of the infrastructure of what they need. It's a fairly technical product that in terms of how people are using us. So, there is a lot of hiring and training going on there. The other aspect is really investing in the frontiers that we are pushing into. So we are putting a lot of resources into, pushing for. We became the number one player in terms of DeFi access for institutions. So both to the permissionless pool, to the permissionless protocol using our Wallet Connect and the browser extension and API, but also, as you guys are probably familiar, we launched Aave Arc with the Aave protocol for the institutional space 2 weeks ago. So there is a lot of R&D investment that is going on into DeFi and improving the security and the functionality over there, and also making some really interesting stuff around the regulatory aspect, NFTs and payments. Those are the three areas that we really looking to increase our basically product and enhance it over there.
All right, interesting. Michael, thank you for joining us and congratulations on this raise. Looking forward to seeing what you build in the upcoming future. That was Fireblocks CEO Michael Shaulov. All right, coming up, another unicorn with a mega raise and valuation. We talk to FTX US CEO Brett Harrison next.
You can NFT anything that is inspiring to you.
This space
has like changed my life. And then I started looking under the hood. I like the potential and the freedom that the NFT world gives you.
I want to be with the forerunners that are pushing the change to how not just musicians, but how creatives are going to sustain themselves.
In the non-fungible joking show, if this ends up being huge, it would change the world.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
All right, let's have a live look at Bitcoin. The CoinDesk Bitcoin price XPX index is at 36,957 now. Well, it's trading pretty flat. CoinDesk Ether price ETX index is at 2429, taking a step back about 2.3%. The DFX CoinDesk's DeFi index is also in retreat about 2.6%. Right now at 276. All right. Well, FTX US, the stateside subsidiary of FTX, raising $400 million after attaining an $8 billion valuation, one of the industry's largest Series A rounds, with backers that include SoftBank, Temasek, and Multicoin Capital. The cryptocurrency exchange intends to use the funds to launch new business lines and explore strategic investments and acquisitions. Joining us now with more is FTX US CEO Brett Harrison. Hello there, Brett. So before we get into the raise, just wanted to get your outlook on the markets. We've been having a bit of a pullback. Do you see that temporary? How do you see the crypto industry moving forward?
So over the last couple of weeks, we've generally seen negative sentiment sort of across global markets, not just in crypto. We see the global equity markets dropping tremendously as well. And what I think we're seeing is that as fund managers and large institutions are trading Bitcoin and other cryptocurrencies more, it's naturally going to create a correlated effect between cryptocurrencies and other global assets. So as long as we're going to see a risk-off scenario in the markets as a whole, I think it's going to affect crypto as well. But also, crypto is a very volatile asset, and it's obviously reached record-breaking highs over the last, let's say 4 months or so. It's sort of natural to see pullbacks and cycles with crypto. And given all the VC money that is pouring, we just heard from Michael from Fireblocks with FTX US as well. We're hearing about raises pretty much every day. With all that money pouring into the technological build-out, these new entrepreneurs, old entrepreneurs who are raising funding rounds, I think we're naturally going to see the market roll back as these companies build and create more value for the industry.
Actually, that's what I was just going to ask. All this money, was it that you've raised, is it locked in before the crypto markets declined? Would it have made a difference, and will we see that enthusiasm from VCs taper off?
It wasn't all locked in before our crypto market started to decline. When we talk to our investors and what they're most excited about when it comes to FTX US, it's not just the short-term spot markets. I think in general, businesses that, let's say, rely entirely on retail trading volume in spot crypto can have a bit of a tough time during periods like the current one, where retail investors tend to pull back in a big way whenever crypto asset prices are going down. But for us, we're looking at the long term, particularly, for example, our derivatives platform. So we acquired LedgerX, we rebranded it to FTX US Derivatives. We're working this year to be able to bring margin Bitcoin and Ether futures to retail and institutional customers. It's the prospect of bringing a large amount of this giant global derivatives market onshore that mostly doesn't exist in the United States that makes our investors most excited about the prospects for our business, regardless of what the short-term markets are doing in things like Bitcoin and Ether.
So, Brett, I was going to ask you about the investors, but before we get into that, I do want to ask you a little bit about what the SEC is doing with some other exchanges right now. They're questioning about the crypto lending practices of them. How much of that is a concern to FTX? How much of it is a concern in terms of not just your derivatives business, but your overall business in terms of how you're able to operate? Are you concerned about what the SEC might do to you?
Yeah, excellent question. So for FTX US, we've taken the position up to this point that there isn't much regulatory certainty yet about things that overlap with securities regulations. For example, things like what tokens are considered securities versus commodities. In which case, if as an exchange you're offering an unregistered security product to unaccredited investors, then that could put you in trouble in the future. Same thing with lending products that might be considered securitized products or investment contracts. So that's why we do hear a lot from our user base that they would like to see us list more tokens. But as an exchange, we've taken the position that it's much better to sort of look at the long run and know that if we're going to be able to list things, we have to be extra sure that this isn't going to be something that's going to get us in trouble with, for example, the SEC in the future. The derivatives platform is regulated by an entirely different regulator, which is the CFTC. And there, in terms of derivatives regulation, the path is very clear and well trodden for places like the CME and ICE in terms of what they're able to offer with Bitcoin and Ether futures. So for that, we feel very confident that we are heading down the right regulated path with our existing federal licensed derivatives platform, both the futures exchange and the clearinghouse.
Any about what President Biden will do, with the potential of an executive order coming down the pike?
So he said that he's very concerned about national security as it relates to cryptocurrencies. I imagine probably the first thing that we're going to see from the administration is going to be some kind of order relating to stablecoins and trying to understand what actually are they, which ones exist, are there any that pose any sort of systemic risks to the economy, are there any that pose risks to cybersecurity and to the general functioning of our monetary system as it relates to our to other foreign entities. I think that's probably the first thing that we're going to see come from this executive order. And I think it follows in the heels of the president's working group, where I think it's natural to want to be able to have common sense auditing of stable coins and their underlying assets to make sure they're not posing systemic risks.
Brett, my understanding is that one of the main goals for FTX US is to take the biggest exchange in the US, and in that sense, passing over Coinbase. Let's just get into the Coinbase thing for a second. So Coinbase, other than first mover advantage, what do you think it will take to actually for FTX US to move to number one? What are some of the obstacles, the main obstacles that remain in terms of beating Coinbase?
Sure. So I think that retail users want to put their money in one place. There's a lot of friction to being able to, for example, take your entire savings that you put into crypto and entirely move those from an existing platform to another one. Coinbase has over 60 million users. They are an incredibly successful product for retail, and they've really captured those retail users from their first mover advantage, being the first public exchange to list and being around for almost 10 years now. So we have a lot of work to do if we're going to beat them just head to head on spot. That's why we have to, in order to be able to at least achieve the kinds of volumes and user bases that Coinbase has, to be able to diversify the product offerings. That's why, for example, we launched our NFT platform last year. That's why we're very excited about derivatives, and not just crypto derivatives. We're interested in going beyond that, for example. And there's nothing that would stop us from listing a broad-based equity index future or a different kind of commodity future as well, in addition to crypto futures and options. And same thing with stocks as well. We're looking into hopefully offering things like common stocks to U.S. investors and trying to give people a holistic product for people to invest, sort of regardless of whether they're interested in crypto or not.
Brett, Coinbase does have one very important thing, though, which is the BIT license for operating in New York. I imagine that is like a very lucrative customer base. How important is that? And is that something that you're trying to get?
Absolutely. So we'd be super excited to be able to take New York customers. FTX US doesn't currently take New York customers. It's something that we're actively working on with the New York DFS, which is being able to be licensed properly in New York so that we can take New York customers. It's worth mentioning that the derivatives platform, because of federal exemption and because it's a federally licensed exchange, we actually can take New York customers for the derivative side of the business. So that could be something where we'll be able to open our doors for New York customers in one part of our asset offering, if not necessarily in let's say in spot crypto immediately, But again, it's something that we're super actively working on with New York GFS. It's a very important piece of the puzzle. And it's very exciting to see, people like Mayor Adams, come out be very pro crypto, wanting to take their salary in Bitcoin. And I think hopefully that the sentiment in New York really moves positively towards encouraging companies like ourselves to be able to open business for all these New York customers that are, dying to become customers of places like the FTX US.
There's also an announcement this morning that a crypto super PAC that's backed by Anthony Scaramucci's firm, Skybridge, as well as FTX, has just been announced. So I'm wondering, what are you looking for in candidates and political action in DC?
I'm not personally involved in that project, so I can't comment too much on it. But I will say that in general, having positive working relationships with legislators, with regulators, with legislators on both sides of the political aisle is critically important. And the critical piece of it is education. One thing that made us very optimistic about the future of crypto in the United States was the congressional hearing that Sam Bankman-Fried testified at a few months ago, that all of these legislators came together and wanted to have a productive conversation around what exactly is going on with crypto exchanges, what are the risks, what are the benefits, what are the potential innovations, how can we improve as a country in terms of fostering innovation in this industry. And I think that being able to present ourselves, for example, as an exchange to legislators and say, hey, we're a resource for you. We would be happy to tell you what we see going on the ground. We'd be happy to help advise on matters like, what kinds of regulation would help both, protect consumers and investors, but also be able to make the United States the place that people want to come and start businesses. We think that we're an excellent resource for that, and we want to continue those relationships.
So, Brett, you just did this big fundraise, of course, and so what percentage of your equity is owned by FTX Global, the parent company? And is Binance involved in any way in FTX US or even in FTX Global? I mean, what's the equity relationship there, and does it affect your ability to deal with regulators?
So the answer is 0 and none at all. So FTX US is not a subsidiary of FTX International. Our equity is not owned by FTX International. Binance is not on the cap table of either FTX or FTX US. We do have a lot of similar, investors in the cap table and ultimate beneficial owners of both companies. Sam Bankman-Fried is the owner and founder and majority owner of both companies. But it's not a subsidiary relationship between the two. They're actually operated, separately, separate servers, separate technology, et cetera. But they do have an affiliate relationship between the two.
All right, Brett, thanks for clearing that up for us. Congratulations on this raise. That was FTX US CEO Brett Harrison. A lot going on the horizon for this team. Coming up, checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, and we'll look at some privacy with Zooko Wilcox of Zcash.
Hi, I'm Michael Casey, Chief Content Officer and co-host of Money Reimagined. You're watching CoinDesk TV.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk, the State of Crypto newsletter. Hello there, Nick. Good morning. So I just saw you had an article out on the House, which has a bill that could let the Treasury Secretary block international crypto transactions. Tell me what that's all about.
Good morning. Yeah. So the House of Representatives just introduced the America Competes Act, which is a bill that's nominally targeted at spurring, economic competition with China, basically ensuring that U.S. businesses are competitive with, compared to Chinese counterparts. Tucked into this bill is a provision that would allow the U.S. Treasury Secretary to basically block transactions that he or she believes is involved in money laundering or, that type of crime, particularly with entities that are across borders, so non-U.S. entities. So, for example, if, there's a company in, let's say hypothetically China that the Treasury Secretary believes is in violation of money laundering laws, she can prevent U.S. financial institutions from interacting with that. And this was first raised by CoinCenter that the provision explicitly includes digital assets, so cryptocurrencies could be involved, or one of these transactions, and B, while the Treasury Secretary already has this kind of power, right now it's subject to a public rulemaking notice, meaning the Treasury Secretary has to justify that decision with a 120-day comment period, and either the Treasury Department has to create a rule after that 120 days that says, okay, yeah, we believe this is justified, we are legally, happy with this, here's a rule saying that this block is continuing, or the transaction block will expire. And this block, both those restrictions really are being removed in the provision as it stands right now. So the crypto industry is concerned that basically this could give the U.S. Treasury Secretary the ability to arbitrarily block transactions to crypto exchanges that are either involved with miners, node operators, wallet providers, or exchanges outside the U.S. and not have to justify why, and not necessarily have to go through a formal review process to ensure that these transactions are indeed involved in money laundering.
So, Nick, why this particular bill? Why was it put into this particular bill? And what is there a backstory that we know of as to how and why it got thrown in here?
So, this is actually the second time this provision is appearing in a bill. The sponsor, Representative Jim Himes of Connecticut, had previously introduced it to the National Defense Authorization Act, a must-pass bill that was going through the process last fall. And this is, again, it seems to be, if not necessarily a must-pass bill, certainly one that Congress is, set on ensuring passes. So, it seems to be going into these massive omnibus bills that the House and Senate both have an interest in getting through.
All right. Well, thanks for monitoring the latest developments out of DC, Nick. Appreciate your insights and have a wonderful weekend. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. All right, all week long, CoinDesk has been publishing a series of privacy-themed articles as part of CoinDesk Privacy Week. And we close out the week with a crypto OG, Zooko Wilcox, CEO of Electric Coin Company, which is behind the privacy-focused cryptocurrency Zcash. Welcome, Zooko. Thanks for coming on. So,
hi, thanks for having me.
Great to have you. So as you see cryptocurrencies evolve, more VC money coming into the fold. We just interviewed two companies with $8 billion valuations, hundreds of millions of dollars in raises, new layer one protocols being created, CBDCs. What do you think of the state of privacy in this space?
I think crypto has got this stage where it's grown greatly and there's more and more users, and that's all very satisfying and exciting to those of us who've been building all along. But it's also, I kind of feel like it's reached that state where it's already got the users who are the early adopters and who are excited about it. And now there's this much bigger user base with the whole rest of the world that doesn't yet see the usefulness and doesn't like things about it, like the argument that it's damaging to the environment and so forth. And I think privacy is part of that. I think a lot of users care about privacy nowadays in terms of they've come to realize that the tech monopolies and the governments that are using their information without their consent really are doing harm to them. And they find it creepy and they really are dissatisfied and they want something better. And so I think of privacy as part of that remaining gap between the crypto early adopters like all of us and the mainstream who just want something that does what they want and that feels satisfying to them, and they want privacy.
Zooko, just to follow up on that, what about Bitcoin specifically? I mean, Bitcoin was introduced as sort of, supposed to be a more private form of money, but now, with all the KYC requirements and I mean, is Bitcoin still useful as a private form of transaction?
Barely. I was part of the circles back then that launched Bitcoin. I'm the author of the first ever blog post on the internet that mentions Bitcoin. And Satoshi linked to my homepage on the original Bitcoin homepage. And it was clear, I don't know any secrets about Satoshi's identity, but it's really clear that Satoshi was part of our culture, the cypherpunk culture. And that the whole point of Bitcoin was two parts: to provide independence from central banks and to provide privacy. But it was also clear to me as a privacy technologist specialist that it totally failed at the second part. Bitcoin, increasingly the narrative that I hear is people saying, wait, I thought Bitcoin could give me privacy, and other people saying, well, actually, no.
Mm-hmm. Well, it seems like a number of academic cryptographers have been increasingly critical of crypto lately, from the crypto means cryptography meme to dismissals of ZK snarks and Web3. So what's your perspective as a long-standing member of both crypto communities?
Oh, yeah. There's a few people in the academic cryptography world who had sort of an immune reaction when cryptocurrency got super popular, and they felt like resentful or left out or whatever. But my perspective is that it's the cryptocurrency industry that has fueled these great leaps forward in technology. I'm going to cite Zcash. That's the thing. It's an open source distributed network like Bitcoin, but my company is one of the companies that supports and improves Zcash. And if it weren't for Zcash, we wouldn't have zero knowledge proofs as a practical, real world industrial strength thing today. And that's just one example. There's a bunch of more science which has already been invented among scientists, but then it just languishes in the sort of ivory tower for decades until there comes to be a real world need for it, which we saw before with public key cryptography. It had been invented for 30 years or 20 years before Netscape added it to the World Wide Web in order to facilitate e-commerce. And that made all the difference. The same thing's happening with cryptocurrency today, is bringing scientific innovations into the real world and focusing both scientists and developers and users on them.
Good morning, Zooko. It's great to see you.
Hi there.
Hi. What do you know about people who are using Zcash? I mean, look, obviously you could say, well, we don't know anything, and that's the point. But is there anything we can garner in terms of who's using Zcash and why?
Yeah, that's a great question. It's true that I don't know very much because there's a bunch of transactions that happen on the Zcash network every day. My advice to your viewers is to install a Zcash wallet on their phone. It's really fun and easy, and in a few minutes you have fully encrypted transactions where you can send a private message and a note and like some money to anyone else on the network, and it's only between your phone and them. Everything else, like no one else can see or intervene in what you're doing. So that's really magical when you try it. So install a Zcash wallet on your phone and test it out. But there are between 30,000 and 100,000 transactions every day, maybe on the Zcash network. Some of them reveal the amount involved, and some of them don't. Out of the ones that reveal the amount, it's typically been like $100 million a day transacted across the Zcash network for 5 years straight. Sometimes a lot more, sometimes $1 billion a day. And I don't have any real like privileged ability to tell who does what. Now, I do hear from a lot of people. One thing I hear from is nonprofits that accept Zcash donations because donors like privacy. And another thing that I've been hearing from is democracy activists like in Myanmar and Russia and Venezuela and Iran and China a few years ago, who are using Zcash to fund their activities without letting the authorities trace them.
So,
there's probably a lot more, but I don't know what it is. There's probably a lot of transactions to and from exchanges.
And you say nonprofits. I mean, what kind of nonprofits, first of all? And second of all, is this very generational? Look, I'm a Gen Xer. You're a bit younger than I. And, our concerns about privacy might be a little bit stronger than those of the kids out there, with their doodads and thingamajigs. Do you see a difference in generational concerns about privacy, given that the younger generations have a little bit more accepted, if you will, that so much of their lives are online?
Yeah, I think there's definitely a big difference, but the important thing about privacy is consent. It's not that it's not that you don't share with anyone, like you live in a mountain cabin in the woods and you're off the grid or whatever, and you don't want anyone to find out anything about you. It's that you get to choose who finds out what about you. It's not someone else's choice. It's not under the control of Mark Zuckerberg or the government or the police or someone, what you share with who. And I actually think the modern generation is even more in tune with that than your and I generation. I'm 47. I don't think you're older than me. You look younger than me. But anyway,
couple of years.
I think the current generation is actually more in tune with that. If you look at the way people use social media, which they use all the time, right? Especially people younger than us, much of what they're doing is deciding who they're going to share what information with, right? Who they're going to block and share which stories with and ask other people to share or not to share things with other people and so forth. And that's all exercising their consent. So I feel like it's almost the opposite, like an acute awareness of the value of controlling what you share with whom is, I think, even more prevalent nowadays.
Zooko, you mentioned earlier zero knowledge proofs, which obviously Zcash has been at the forefront of. I mean, zero knowledge proofs seem like such an elegant solution because it's both private and verifiable. In theory, this should, appease regulators. So what is it going to take for zero knowledge proofs to really go mainstream and hit the prime time and replace all these other methods where we basically have to give out our social security number to, all sorts of people? I mean, what's missing for it to get to the next level?
That's a great question. So everyone install a Zcash wallet right now, and you can use zero knowledge proofs to send private messages and money on an open, public, decentralized, attack-resistant blockchain, which is super awesome. But you can't use it. You can't use zero knowledge proofs when you go into like the doctor's office or the DMV or anywhere. The way they try to authenticate you is they ask you to hand over some private information about yourself. And as a computer security guy, this just gives me the heebie-jeebies. Like, they're going to take a copy of my birth certificate or whatever, and they're going to put it in their database. And that database is totally hacked by like Russian and Chinese mafia. And it's sold, like everyone's information is sold on the dark web for, $100 for a copy of everyone's social security number or whatever. It feels like it's got to be nearing the end of its life because everything has already been hacked and exploited. And so at some point, it's going to be easier to buy a new social security number from the dark web than to convince someone to take your real social security number. It's a total disaster. And your question is, why aren't we switching to zero knowledge proofs as a replacement for that? I don't know why not. Probably just that it's too early. Like the people who maintain those systems haven't heard of it and don't understand it and have not yet tried it out. But I agree with you that in principle, you should be able to go into, like the CoinDesk had a great article this week about what if we got privacy right in 2035. And a part of it was you go into the liquor store and you want to buy some wine, and the guy behind the counter is leering at you, and you don't want to show him your driver's license with your full name and address on it, right? You just want to prove to him that you're older than 21. And that's what zero knowledge proofs do. It totally makes sense. And it also means that like a copy of your driver's license doesn't end up in the database of the liquor store.
Absolutely.
Right.
Just quickly, looking forward for a moment, the Beijing Olympics are about to start, and we're going to see the China's central bank digital currency basically, making its global stage debut. How concerned are you about central bank digital currencies? Because they are in many ways the complete opposite of this, right? I mean, they are, digital currencies that are issued by a government, don't really have privacy protections. And now we see close to 90 countries actively exploring issuing one.
Yeah, it's a good question. And the Chinese model, the Chinese government, the People's Republic of China or the Chinese Communist Party or whatever, have a very clear model of centralized hierarchical control, and in particular with regard to the CBDC, there's this very clear model that the government and the police and the officials can get access to everyone's everything whenever they want, but the people have privacy from one another. The plebes, the normal people, have privacy from one another. And one thing that's interesting to me is how many of those other 90 or however many countries are going to adopt that model versus how many are going to adhere to traditional political values. In particular, the United States. I'm really optimistic that the United States will stop aping the government of China and start living up to its own values.
So Zcash is shifting to proof of stake from proof of work. First of all, why are you guys doing that? What led to that process? And did you tell Adam Back about this?
I haven't talked to Adam Back in a while. I used to hang out with him back in the day. Why we did it, I wrote a blog post you can look up that explains there's like 4 or 5 different things that are better about proof of stake than proof of work. It's more cost efficient and safer for the users. It's faster and more usable for the users. It eliminates this debate about whether proof of work is good or bad for the environment, which I don't know the answer to that debate, but I don't want to have that debate because my mission is to empower everyone with economic freedom, not to fix the environment. It means that the people who are running the network, which in a proof of work network is miners, in a proof of stake network it's validators. In a proof of stake network, the validators can become holders, right? They can become investors in the coin. In a proof of work network, the miners are kind of forced by economics to become like electricity maximalists. They have to spend almost all of their earnings on infrastructure. So I think, did I forget anything? I think that proof of stake is fairer and more decentralized than proof of work because small players can stake and get rewarded like on an equal footing with large players, which is not true in proof of work mining. Those are all the reasons.
Interesting. You also have a couple of upgrades.
Maybe I'll sit down with him at some point.
Adam Back is not happy, but you have a couple of upgrades coming up to improve privacy and user experience on Zcash network. Tell us a bit about that, and also specifically Halo Arc's mainnet launch. It's been delayed several times. It's supposed to come out now in April. I wonder when that will actually happen.
Yeah, I believe it'll actually happen in April now. We've always been very much the opposite of move fast and break things. We have always worked really hard and done like many extra miles of quality assurance and security assurance for Zcash. And I'm really proud of it. There's never been a exploited bug that harmed users in Zcash. There was a terrible bug, but we fixed it before any bad guys found out about it. There's never been, any of that like failure, like the network ceasing to work for the users. It's been 100% uptime for 5 or 6 years now. Halo Arc is the latest cryptography upgrade, and I'm really excited about it as a geek, as a cryptographer. It's the first discovery of trustless and recursive zero-knowledge proofs, which fixes 2 of the engineering limitations that might be preventing zero-knowledge proofs from taking over all the other things so that we can stop getting all of our private stuff hacked all the time, like we talked about earlier. Trustless means it's the new generation of zero-knowledge proof where there isn't any setup procedure where you have to trust that some people did the setup correctly. In the first generation of zero-knowledge proofs that we pioneered, we had to have a setup procedure. And there's a great podcast on Radiolab all about that. We did a fine job of it. Best setup procedure ever. But the modern thing is even better, which is no setup procedures. And recursive means that the zero knowledge proof can prove any arbitrarily sized fact. Like no matter how big your database is, I can give you a proof that says I scanned the entire database and here's all of the hits in it that matched a certain thing or whatever. So it's a very general purpose form of zero knowledge proofs, which one of our cryptographers, whose name is Sean Bowe, just discovered 2 years ago. And that's what's going to activate in April. It's been delayed twice because we're so careful. We've hired 2 different security auditors, and then we were reviewing it ourselves, and we found a bug that both of the security auditors and our own internal team had missed. And so we set back the launch date so to like scour it over again and again before it activates. That's happening in April. And it does come with what you alluded to, which is usability benefits. So I really advise your listeners to install a Zcash wallet on their phone because in my experience, I used to go around and try to lecture people with a whiteboard and like a debate or whatever. But then about a year ago, I just stopped lecturing and I just started, whenever I'm talking to someone, I'm like, hey, install this on your phone. Let's check it out. And, in about like 80, 90% of the cases, it's a total light bulb. They're like, holy moly, this is great. I can send fully encrypted, like censorship resistant things to anyone I want. No one else has any say in the matter, and it's a fully open network.
Slow and steady wins the race, and I'm glad you're taking your time to develop your Zcash before releasing these updates. Zooko, we got to wrap it up there, but thank you so much. This is getting to the roots of crypto, talking about privacy. Thank you so much. Right, that was Zooko Wilcox, creator of Zcash. Time now to check in with Crypto Twitter for our tweet of the day. This one from House Representative Tom Emmer, tweeting another day, another baseless rejection of a Bitcoin spot ETF. Of course, the SEC rejected Fidelity's Wise Origin Bitcoin ETF proposal the other day. When ETF, Gary Gensler, when ETF? Also, Lawrence, aging like a fine wine.
Me? Although, thanks, Zooko, for telling us your age. I mean, that's hackers. I hope you don't listen.
Yes. That didn't happen. All right, that's it for First Mover. Thank you, Emily Parker. Thank you, Lawrence Luton. Have yourself a wonderful weekend. I'm your host, Christine Lee. Meantime, check out The Hash at noon Eastern and All About Bitcoin at 3 o'clock. You're watching CoinDesk TV. Also up next, stay tuned for the daily forecast to see what's happening in the Asia crypto markets. What's happening?
Welcome to the Daily Forecast, January 28th, 2022. I'm Megha Chadha of Forecast News, covering all things blockchain. The lunar year of the tiger begins next week. And while for many that means it's time for traditional celebrations with family, is giving the gift of crypto becoming a new trend? We'll take a look at that story and a whole lot more coming right up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories out of Asia today. First up, South Korean game developer Netmarble is planning to issue its own cryptocurrency, with CEO Kwon Young-sik saying the token will act as a key currency in the company's games. Netmarble, which has a market capitalization of $10 billion, is among a growing list of Korean game developers who are diving deeper into blockchain gaming and the metaverse. The company is aiming to launch its play-to-earn game, Everybody's Marble Meta World, this year to a global market. However, like all play-to-earn games, it will not be available in its native country. Why? Well, that's because play-to-earn games are restricted in Korea due to their speculative nature. Meanwhile, still missing out on the live music experience because of the pandemic? Not to worry, the metaverse could offer a solution to that. Over in Hong Kong, the Sandbox has partnered with Warner Music to create a music-themed world in its gaming metaverse. Named Warner Music Group Land, it will feature concerts and musical experiences from some of the artists on the music company's extensive roster. While the Sandbox, a decentralized gaming virtual world subsidiary of Animoca Brands, will hold a special land sale in March, offering music fans the chance to bag a spot right near the stage. You can find those stories and lots more at focus.news. Meanwhile, Lunar Year celebrations are fast approaching, and for many living in Asia or those of Asian descent around the world, that means it's almost time to hand out red packets containing lucky money. Focus News' Timmy Shen looks at how the crypto world is getting in on this traditional way of gift giving.
Giving and receiving lucky money, traditionally crisp new bills tucked into fancy red envelopes during the first 2 weeks of the Lunar New Year, is a part of many Asian cultures. But while digital payments are commonplace in Asia, the concept of gifting crypto remains niche. However, some crypto exchanges and wallet operators are trying to change that. Binance, the world's largest crypto exchange by trading volume, already offers a gift card program, but it has stepped up its game by actively marketing the function ahead of the new year, beginning on February 1st, as well as offering tips on ushering the new year with crypto. Meanwhile, Singapore-based Crypto.com offered a red envelope featured on its wallet app last year, and this year it is giving away red packets to friends and family of its users. While crypto custody and asset management platform Kobo, also based in Singapore, says it will randomly gift red packets to loyal users. Self-custodial wallet mToken told Forecast News it tried out a red packet feature back in 2019, but users complained that transaction fees at the time were too high. However, they are optimistic that this could change as there are now projects underway looking into reducing those costs. And Daniel So of Hong Kong-based merchant payments provider WorldPay from FIS told Forecast News that giving fiat currencies in red packets remains clearly in the lead for the moment. But as digital currencies become more mainstream, that could spur greater interest in crypto red packets. For Forecast News, I'm Timmy Shan in Taipei, Taiwan.
Our lives are increasingly being lived on the internet. And as we now move towards a variety of metaverses, we are likely to generate even more personal information online. What if there was a way to verify who we are in our online avatars without giving away any personal data at all? Maybe there is a way with zero-knowledge proof protocols. And who better to discuss them than Adrian Brink of Anoma with his insights on all things disintermediation. Great to have you with us, Adrian.
Glad to be here.
Adrian, to kick it off, very simply explain to us what are zero-knowledge proof protocols and why should we care about them?
Very simply put, they allow you to show that something has happened. You can simply reveal the proof, and then the proof is a mathematical guarantee that if the proof verifies, then in order to construct such a proof, you would have had to know the secret underneath. You can use them for computational compression. So think, if I walk 100 steps, what is the way to verify that I've walked 100 steps? Well, the naive way is to walk the same 100 steps, right? But that takes a linear amount of effort. But with the zero-knowledge proof, I can walk 100 steps, give you that proof that shows that I've walked 100 steps, and you have to verify the proof. It's our second component to zero-knowledge proof is computational privacy. It allows you to hide data. So for example, in the password example that people generally use, it's I can show to some external party that I know a password without ever revealing that password to them. I just generate a proof, and I need as a private input my password, and so someone that doesn't have my password can't generate the same proof. But then I generate this proof and I send the proof to you, and you're now convinced that I must know the password, because otherwise I would have not been able to generate this proof.
Now, as we migrate towards spending a lot of our time via virtual avatars, how will zero-knowledge protocol help in a seamless transition as we move between platforms?
You can think of this in the identity case. So traditionally, how do you do an age verification in the digital world? You upload a picture of your passport, it contains a bunch of information, some human looks at it. What we could be doing in the future is that we simply take a passport and then I generate this as a secret input. I don't reveal my passport. And then I take this as an input, I generate a proof, and the proof just verifies that I'm 18 or 21 or older. And then the person that wants to do age verification just receives the proof, verifies the proof. They receive no other data. And I think that's going to be quite fascinating. The other thing is, assume you have an NFT and sort of some celebrity has owned it and has value because previous owners were famous or whatever. What you can do, and you want to now take this NFT to a different platform. The problem is when you take an NFT to a different platform, you lose its history. With zero-knowledge proof, you could construct a proof that attests to all the cool past owners that this NFT has had.
And talking NFTs, Twitter recently announced that you could get the little blue verification tick for your NFT profile picture. Now, does that send any privacy alarm bells ringing for you, Adrian?
Oh, absolutely. I think anyone that does this, like 99% of the people doing this, are just going to reveal their entire financial history on Ethereum, because most of these NFTs currently live on Ethereum, but this will extend to other blockchains too, to anyone that cares to look. So if you have your NFT verified on Twitter, you can guarantee that Chainalysis for 99% of the people can figure out their entire financial net worth on Ethereum, without a shadow of a doubt. You start combining this with data from exchanges and you're just transparent. And you're not transparent to some sort of democratically accountable organization. You're transparent to anyone that cares to look. Anyone that does this, I think it's a very bad idea, and I don't think people have thought of these consequences. Incidentally, what you could do with a zero knowledge group is you could say, I own an NFT, but you don't reveal which address you own it, and so you just upload the proof of ownership to Twitter, and you still get the verified checkmark without having to dox your entire financial history. And future, by the way. This also applies to your financial future.
Well, the pitfalls of sharing your NFT avatar may not have been obvious to many. Adrian, thanks so much for educating us on how to keep our digital selves safe. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Megha Chadha. Until next time.